The price of Bitcoin is being manipulated right this moment, every single freaking day, because you can sell a paper Bitcoin with no corresponding demand for physical in the futures market. And the longer they put off the ETF, the worse this gets. And it's intentional. That's the thing. It's not like this is magic. This is real, and it's been happening in financial markets. Look at every commodity market in the history of mankind. When there is no futures market, the commodity has a nice cycle between buyers and sellers and producers and speculators. When the future is introduced, you get peaks and troughs, and you get massive financial engineering, and you get manipulation because it's very profitable. One Bitcoin is one Bitcoin. It always will be forevermore. But we don't price Bitcoin in Bitcoin. We price Bitcoin in other things, other pieces of toilet paper. So if you happen to live in Turkey, there's never been a bear market in Bitcoin. Not ever, because the lira just went to shit. And if you live in Venezuela, there's never been a bear market in Bitcoin because the bolivar went to double shit. And if you live in Argentina, now with talks of devaluation, again, Bitcoin just goes up. Now, Bitcoin goes up and down in the US partly because of this, right? So in the first 246 years of our republic, we printed $10 trillion. 246 years, $10 trillion. Then in 18 months, we printed $10 trillion. Come on, someone shudder a little bit when I use the T word. Y'all know what a trillion is, right? Y'all math majors, I'm gonna shut the doors, make you sit here with us for 31,710 years, which I promise would be most unpleasant to listen to me for that long. And you got to spend $1 every second. That's 1 trillion. So 10 trillion, we printed 10 trillion. So if you doubled the money supply, what should have happened to the dollar? Should have gone down in half, exactly. What should have happened to the price of Bitcoin? Should have doubled. It's exactly what happened. Well, but it didn't just double. Yes, it did. It was about 13,000 before. It's about 26,000 now. It perfectly doubled. But it's down in the last few months. No shit, Sherlock. Have you seen this thing called Bitcoin futures? You can go to the day the Bitcoin futures ETF was approved. The day was the peak of Bitcoin priced in US dollars. Why? Because just like gold, anyone looked at gold since the pandemic? Gold should have doubled. Read Chris Wood, okay? Gold has been the perfect store of value for 5,000 years. It's a long time, but it's been flat, dead flat at $1,900. Why? Because it gets spoofed artificially manipulated by JP Morgan, and they get fined every year $1 billion. And they're like, yeah, well, we made 20. It's the cost of doing business. You keep finding us $1 billion and we'll make 20 and we'll be happy. And they'll keep the price flat. So they've artificially suppressed the price of Bitcoin over the past few months. Why? Well, because BlackRock wants to buy it really cheap. There was a great meme the other day. Please don't sell your Bitcoin to BlackRock. Please don't be that person. But that's what's happening. And everyone's like, oh, when's the ETF going to get approved? And what's that going to do? It's going to get approved when JP Morgan and BlackRock decide it will be approved, just like GLD was held up for 2.5 years until JP Morgan could get short enough gold. So all of this goes to my last point, which is the title of the panel. Does macro matter? I mean, she stole our thunder saying probably, yes, probably. But actually, in our world, no. Crypto, digital assets, whatever you want to call it, actually are uncorrelated with traditional assets for macro reasons. Stocks and bonds are highly correlated, along with currencies and commodities, because they derive their value from the same things. GDP growth, inflation, interest rates, and corporate profits. Those four things have nothing to do with Bitcoin, Ethereum, Solana, anything. Nothing. Those things are driven by millennial adoption, okay? The tech itself, the regulatory environment, and changes in monetary supply. So there's a little bit of linkage there, but this idea that somehow stocks and bonds are the same, most of the garbage that passes as crypto has no equity value, no debt value, no claim on cash flows. It's literally dog shit coins that people trade back and forth. That is not a thing that has value in any way, shape, or form, like a stock where I own a piece of a company that generates, profits from goods and services. So macro doesn't matter to all that stuff, but it matters. Tim Peterson, who, if you don't follow, you should follow, at N Squared Crypto, has the best model on Metcalfe's Law for valuing the Bitcoin blockchain network. And it is simply a network, and it's very easy to value. And the fair value is determinable, unlike people saying it's not, and it has no value. No, it has value based on network. So that value today is in the low 50,000s, not 26. And his range is 40 to 100, which 53 is right in there. So if that's accurate, which I'm going to say you got 1, 2, and maybe Jim might even agree, so we'll have 3 is the charm. If that's accurate, then the current price is below fair value. Well, what does that mean? That's what happens at the end of bear markets as you begin the accumulation phase. And this is why you have a 4-year cycle. So all the punters and speculators and gamblers and degenerates who bought on leverage, which why would you buy an 80 vol asset at 100 times leverage? You're an idiot. And it goes down and everybody gets liquidated. And so you fall far below fair value, and then you eventually trough. And just like at 3,200 in December of 18 was the very, very bottom. Fair value at the time was around 11,000. You'll eventually accrete back up through crypto spring and summer. We're in crypto summer today from June until June of next year. And you accrete back to fair value. But then the halving comes along. Well, the halving does something interesting in that it doubles the fair value. It's actually one of the most genius coding things ever in the history of coding, in that it's a built-in mechanism for moving the price. And by moving the price, you attract interest. And so once the price starts moving, after the halving starts and the block rewards go down, then the investors get crowded out by speculators. Investors buy assets below their fair value. That's anyone who's buying Bitcoin today. They are investors. When it gets to fair value, then the speculators come in. What are speculators? They're the opposite of hedgers. Hedgers are forced to sell. They produce the asset, they sell in the marketplace using the futures market. And the speculator is just the opposite side of it. There's nothing wrong with speculator. The problem is the gamblers. The gamblers come in after when it's really moving, and they start buying with leverage. And that pushes us into crypto fall, into the parabolic where we get above fair value. So the last fair value was around 30,000. We got all the way to 69, and then the crash happens.
And so the difference between a speculator and a gambler is just leverage?
Leverage and knowledge. A speculator is taking the opposite side of a hedger because they know the hedger must sell. Okay, a gambler doesn't give a shit about any reason. They just know that something's moving, and they want to take a piece of it. The price of Bitcoin is being manipulated right this moment, every single freaking day, because you can sell a paper Bitcoin with no corresponding demand for physical in the futures market. And the longer they put off the ETF, the worse this gets. And it's intentional. That's the thing. It's not like this is magic. This is real, and it's been happening in financial markets. Look at every commodity market in the history of mankind. When there is no futures market, the commodity has a nice cycle between buyers and sellers and producers and speculators. When the future is introduced, you get peaks and troughs, and you get massive financial engineering, and you get manipulation, because it's very profitable, extremely profitable to manipulate prices using paper, right? In the old days, if I wanted to sell you oil, Jack, I had to have a barrel of oil. Mm-hmm. Now I can just make a promise that I'll go get a barrel from Jim here, and maybe he'll have some to give me. But hey, if I can't get it, we just settle up. Except in 2020, when they couldn't all settle up because the Saudis had come in and filled up all the storage and bought up all the storage. They didn't actually fill it up. Mm-hmm. They just bought it up, and the price went negative.
Right,
Remember, oil price went negative? That was fucked up, right? That was unreal.